Hello and welcome to Morning Trade with Moneycontrol. I'm Karunya Rao, and as always, I'm here to help you navigate the trading day with actionable strategies, sectoral trends, and most importantly, your queries during the course of the show. So please keep those comments coming. Well, let's kickstart the show and see what the global handover looks like. Minutes from the December Fed meeting indicate the central bank is committed to fighting inflation, and officials expect higher interest rates to remain in place until more progress is made. Wall Street shrugs off hawkish commentaries to snap a two-day losing streak and record its first positive close in 2023. Asia also opens higher, while SGX indicates a mildly positive start for the Indian market. On the show today, we get you a sneak peek of IT sector's Q3 earnings preview. Other stocks in focus will be Mahindra Financial, Marico, Somany and IRB Infra. All right, let's get going and talk technicals with Nirav Cheda of Nirmal Bang Securities. Good morning, Nirav, and thanks for joining in. What is the trade setup telling you? And first expiry for the fresh new year, what's in store?
Yeah, hi Karunya. Thanks for having me. In the last 15, 20 days, in fact, even a month, what's happening is that, Nifty is actually in a range, after this fall. Nifty has been taking good support from 18,000 odd levels and taking resistance from 18,400 odd on the future, which was also its 50-day moving average. Also, one look at the data. Data is a bit mixed as well. The VIX is low, PCR is at comfortable levels, open interest is low. So all this data, with this data, going down is unlikely. Even if it goes down, you can see a V-shaped recovery, like you saw in the previous 2 weeks, where Nifty had fallen to a 17,800 and it shot up again to 18,400 odd. So, such kind of recoveries you will see. But having said that, chart is again in a range-bound trading action. It is consolidated, and that is why we don't see much on the index front. 17,800 on the Nifty is a good support area. Once that is broken, only then you will see, very heightened selling pressure, and it opens up the gates for 17,200 odd levels. But that's far in the future at this point of time. But just one thing to note here: 17,800 is the stop loss for longs. So you're holding any longs once 17,800 is broken, you exit those positions on the long side. In the next, 4 or 5 days, we believe 18,000 should be a good support area. 18,300 should be the resistance, and this is where Nifty should oscillate. In the at least for this week. Again, for today, there is likely to be a range-bound action. So nothing much on the index front. Bank Nifty 43,500 is an important resistance. Once that is broken on the upside, you will see some good buying action coming in. This index looks better of the two indices, respectively, from Nifty and Bank Nifty. So definitely, the place to be right now is in the banks, and you can probably look to buy private banking, stocks like the HDFC Bank or ICICI Bank, which have shed open interest. And what really happens is, when you shed open interest, not many people are holding it, and there is space to go on the long side. So it is likely that these stocks will witness good buying, and you can see some good action here.
Okay, all right. Nirav, let's also talk about some individual stocks that could be in focus today on the back of news flow. The first name I have on my list here is Mahindra Financial. RBI has lifted restrictions on loan recovery via outsourcing, via a third-party arrangement. The company is now also saying that they're committed to strengthen their recovery practices, outsourcing arrangements, also looking to tighten the process of onboarding third-party agents and strengthening the accountability framework. So some relief coming by as far as RBI is concerned for M&M Financial. Talk to us about what the chart is telling you and what kind of a move can we see from these levels.
See, it's a beautiful chart. It was in consolidation from 2018 onwards, up till 2022 late end. But it has witnessed a breakout around that 190 odd levels, and ever since that breakout, this stock went up to around 240 odd. Again, retraced down, retested the breakout, and has moved up since again. So this is a very strong pattern. We believe the stock should move up towards that 280, 300 level. So it's a good level to enter at around 230 odd, the closing. So look to buy the stock. It's a very strong pattern. You can keep a stop loss of 220 for your longs and expect 280 to 300 to come within a month or so.
Okay, all right. Moving on to some Q3 updates coming in from Marico. Their consolidated revenue for the quarter gone by is likely to come in low single digits on a year-on-year basis. That's the kind of growth they're anticipating. The gross and operating margins are expected to improve both sequentially and on a yearly basis. They've seen some stabilizing in raw material pricing as well as and the overall costing trends. There's likely to be a modest growth in operating profit because of the lower revenue growth. Now, Marico, just like their commentary for Q3 and the business update for Q3, even if we look at the stock price, that also has been very, very lackluster. Whether it's the one-year chart, 6-month chart, last couple of months, or even this week so far, Marico has been as flat as it can be. Talk to us about the future trajectory. Is the sluggishness likely to stay?
Yeah, see, Karanya, not only Marico, but if you look at the charts for FMCG as a whole, most of the stocks look like what Marico is looking at this point of time. Very lackluster, as you said, sideways. And there is no real trend which is coming out. So it's very difficult for us also to find out, if this stock will actually give a breakout or not, because this stock has given a false breakout a couple of times. Again, it has come down in the range. From a little longer term perspective, I believe, it will be healthy for most of the FMCG stocks, including Marico, to actually witness some selling. It can come down probably, a lot of people will exit the counter and then probably move up. So it's a good thing to happen for this particular stock if it comes down to 450, 420 odd, which is the range to buy. I don't think, with the current chart and current setup, this stock can really do very well from current levels. So I do not recommend to buy at this point of time. Wait for some downside.
Okay, all right. Some fund action brewing at Somany Ceramics. PGIM India Mutual Fund has bought close to 3 lakh shares of the company at an average price point of 499 rupees a piece. Now, yesterday the stock closed sub 490 levels. In fact, it has also been a quiet or a sluggish mover last few months. But 2023 seems to have started on a decent note. What lies ahead for Somany?
Yeah, this stock has a good pattern actually. See, no doubt it has come down from 940 odd. So almost, half of what it was about a year back. Now, at 480, looking at the overall setup and the volumes, I would definitely be a buyer here. It's a good setup. Also, in 2021, there was huge volumes around the same area, and from here, this stock had bounced. It has come right there. So I definitely believe it's a good support area at current levels. You can look to buy from trading perspective as well. You can see a good quick 10% from current levels. Good volumes have been seen. So buy the stock. You can keep a small stop loss of around 455 for your longs, and expect around 580, 600 to come soon.
Okay, all right. Talking about a strong start to the fresh year, IRB Infra, again, one of the strong movers here. The board has given an approval for a stock split. The subdivision of 1 share of 10 rupees each will happen into 10 shares of 1 rupee each. Now, there's been about 9-10% upside in this stock if we look at the last 5-6 days. What do you think is going to happen now on back of not just this news, but even going into the next few months? How do you see IRB playing out?
Yeah, see, IRB, if you look at the chart, there was a flag kind of formation taking shape, and then a breakout has come. And on the longer term charts as well, you see a good rounding formation breakout. So I definitely like the pattern. I believe one can look to buy the stock at current levels from a short to medium term perspective. You can keep a stop loss of around 300 for your longs or 298, and this stock can probably come towards that 360, 380 odd levels, which is where some profit booking will take shape. But at this point of time, it's a good buy.
Okay, all right then. Nirav, request you to stay on with us. I want to also touch base with Saurabh Jain of SMC Global Securities to talk about IT sector. Good morning, Saurabh. Next week, we'll see a slew of IT giants and heavyweights delivering their Q3 report card. Now, going by the usual historic trend, also Q3 is typically a quiet or a softish quarter. But this time around, when we're looking at several other headwinds in the form of furloughs, in the form of recessionary fears from US and other Western markets, what do you think? How do you think Q3 is likely to shape up for IT companies back home?
I think in the September quarter, we already have witnessed that there has been a lower spending on the IT sector because of the macro headwinds and corporates getting deferring their orders, they're delaying their orders and the spending. And I feel that same phenomena will happen in the December quarter also. I think we'll witness that these companies will find it difficult to maintain their margin. I mean, they will continue to face difficulty in maintaining their margins, and will face difficulty to convert their order book to bill. And moreover, I think the order intake will also be lesser compared to the September quarter. So I feel that yes, the earnings would be dismal for the sector as a whole, and I think this phenomena will continue in the foreseeable future.
Okay, all right. In fact, if we look at deal wins, now last year we saw IT companies reach a record high as far as deal wins are concerned. But are these deals that have been in the making since Q1 of FY23? Now, do you see deal sizes and order inflow also tapering off as we move into Q4?
I mean, seriously, if you look at the body language of the large corporates in the US, they are feeling the brunt. I mean, they are seriously feeling that the recession is around the corner, and now they are thinking of laying off the people, trying to maintaining their margin and spending very judiciously. That is why we are seeing some of the larger orders are also getting delayed in the pipeline, which Indian companies are talking about. So I think, yes, I feel that recently the Fed minutes yesterday only showed that they would remain hawkish till the end of the 2023, and in no way the interest rates are likely to come down. This would further affect the economy per se. And I think for the bigger IT companies, I think the kind of revenue growth that they have seen till the first quarter of the 2022 will take I think 4 to 6 quarters to come back. I mean, more than that, maybe more than that, and they are yet to see the trough on the valuation side also.
Okay. But would you say that the market has already sort of priced in the lower earnings projections, not just for Q3, but for the next couple of quarters as well? Is the market already factored that in? Because, yes, low-level buying is happening in some stocks, which has kept them afloat. But it's not like, the sell-off has made them very attractive and people are, rushing to lap them up. What exactly is... are they worried about? And secondly, what are you sort of advising your own clients when it comes to investing in IT?
See, there are so many variables working in tandem, both locally and globally, and largely all the markets are very largely data dependent. So now the market is keenly watching how the inflation is likely to pan out in the US markets, and it's at stubbornly high levels, and so would the stance of the US Federal Reserve. With respect to the lower level buying, some of the traders are chipping in, anticipating that maybe the trough has been made by these IT companies. But in my opinion, I think they are yet to see. They are yet to see the margins getting hold on to and back to where they were about 4 quarters back. So in my view, I think the trough is not being made, and we are advising our client to stay away from the IT sector since November 2021.
Okay, all right. And have you guys sort of identified any outliers or any relative outperformers for Q3 earnings? Any names that are going to be on your list?
I think the only name that comes to my mind is the Infosys, because it has been on a strong footing. The cloud-based revenue is higher if you compare it to the other large companies, and there was also a margin expansion in the September quarter. And the management is also confident. They have spent a hefty amount a few quarters back to get hold onto the things. So I think if one wants to be a contrarian on the sector, I think Infosys holds the.
Okay. All right then, Saurabh, thank you for joining in and talking to us about what to expect for Q3 earnings as far as the tech space is concerned. Of course, next week, TCS will be kick-starting the earnings season as always, and we'll just wait and watch how things pan out for the entire gamut of companies. Okay, back to technicals. Nirav is standing by. Nirav, any of these IT names that have caught your attention? We've actually been getting some comments also, and some of the names that, one of the names that kept recurring was Infosys. So if you could give us some color on how the IT index is looking, how Infi or perhaps any other stocks that have interesting chart patterns right now.
Yeah, looking at the overall IT index, most of the stocks, in fact, all the stocks are into in a consolidation. I believe this consolidation should still, take another couple of months. Having said that, I don't see much downside from current levels. I believe, the downside for IT sector as a whole, the index, 26,000 is a good support area, and I believe that should not be broken now going forward. Coming to Infi, Infi has good support area around this 1400 odd levels. Ever since it touched that level, it has witnessed a good bounce. The only problem here is that 1625, 1630 range. Whenever it comes there, super selling is seen, and it comes down again. So it retests the support area. It is now coming down to retest its support area. It's already around the 1480 odd levels. I believe it can probably witness another few days of selling, and then again some buying should come in. The good part for Infosys is it has witnessed a golden crossover. That means that the 50-day moving average has moved above the 200-day moving average, and that is a very, very good thing. So this can probably be the last fall for this particular stock, and then you can see a good upside in this stock. And finally probably this 1630 odd levels would be broken, and you'll see it coming up towards 1850, 1900. But the next few days you will see some amount of selling. 1450 can be retested. So if that happens, look to buy the stock. Also, one stock I really like in the IT space is Wipro. So Wipro started its selling way before the selling was started in the IT sector as a whole. In December 2021, the stock started to fall from 700 odd levels. It is half from that level, but in the last 3 months, the volumes that this stock has seen is very good. Plus, a lot of shorts have exited the system in the last month or so. Rollovers have been good. So I believe this stock can now witness some good buying. I don't see much downside here. So one stock to buy in the IT space at the current levels is Wipro. You can keep a stop loss of around 375 for your longs, and you can expect 450, 500 to come, 480 in fact to come very soon in this particular stock, because I think this will again lead. It led the rally, now it will lead the upside.
Okay. All right. I want to also, address some more comments and queries that are coming by. Suraj is asking about Bharat Rasayan. Now, this stock again has been a bit of an underperformer for the last many, many months now. At 9,700, where do you think it's headed?
See, the pattern not very good for this particular stock. It's a double top kind of a pattern, and it has just happened. So generally, what happens is, this stock will take time, probably 3 to 6 months from here, and some selling should come in. It can probably go to 8,000 or even lower. So if you're holding on to this stock, exit the stock. Wait for some downside. Only then look to buy.
Moving on to some PSU names, PFC is one stock that continues to do well despite, the run-up that we saw most part of the second half of last year. Now, this week again, it made a fresh 52-week high. It's gained about 10-12% on the upside already. Vasudevan is asking if you could share any short-term targets for PFC. Is there a level you can identify?
Yeah. See, if you just look at the near-term chart, the chart looks very good. But in this particular stock, you need to see a longer-term perspective and a longer-term chart. And, one look at the longer-term chart. From 2013 onwards, this stock has gone nowhere. Whenever it comes to this 155, 165 odd range, you witness some selling in this stock, and suddenly it can, it comes down to 100 or 90 odd level. So it is now touching the upper band of its resistance area. I am not very sure if one can be buying it. Also, volumes are very high at current levels, at the higher level. So I would suggest, if you are a short-term player, do not look to buy the stock. Only once 165 is broken on the upside and this 8-year consolidation is broken above, only then you will see a very aggressive move in this stock. But at this point of time, I would be a seller. I would just be booking profits and, staying on the sidelines, waiting for this breakout to come in, or 145 to break on the downside so I can short.
Okay, all right. Let's move on to the next question. This is from Jitendra. He says that he bought IEX and it's down 45% from his purchase price. We've not really got the purchase price or the quantum of shares he owns, but he's making a loss right now. What do you think IEX is likely to do in the near future or in the next few months? How is it looking, the chart?
Yeah, Karunya, I get this question a lot. A lot of people are stuck in IEX, and almost everyone's buying is around the 250 odd levels almost. Looking at the chart, the volumes are missing in this counter. I am someone who looks at volumes very closely, and unless you see some good volumes on the downside, I wouldn't be buying a particular stock. At this point of time, the good thing about this stock is it can now go into consolidation, and probably this volume will come in the near future. But looking at the chart, do not average it at this point of time. 130, 125 is a good support area. It should probably bounce from here and consolidate in between 125 on the downside and about 160, 65 on the upside. But I don't see much upside from current levels, at least in the near future.
Okay, so cautious view coming in for IEX. Another stock from the broader markets is Vaibhav Global, for which we keep getting a lot of questions. Satya is asking about Vaibhav Global again. They bought at 320 rupees, asking for strategies for the medium term. Now that it's at close to 300 levels, they've clearly lost some money on it. Should they add more? Should they stay away and cut their losses? What do you think?
This stock has witnessed some selling in the last 1.5 years. It has been under selling pressure from June 2021 from that 1,000 odd levels. This stock now has, almost lost 70% of its, gains from that level. Again, in the downside, you are seeing some good volume happening. that means, a good base is being formed in this particular stock, and that is a very good sign for, people holding it. Having said that, I would average it on the upside only, not on the downside. If it crosses about 340, this stock can actually witness very aggressive buying, very, very aggressive buying, which can take it up towards this 450, 500 levels within a span of a week or so, or probably even 10 days. So at this point, do not do anything. Hold on to the stock. You can keep a stop loss of around 290 for your longs. If this is broken, just exit the counter, because then you don't see where it will stop. But definitely about 340, please buy more. You will see a good move up to 450, 500 odd levels.
Okay, all right. Naveen wants you to address the stock of SBI. Now, this one has seen a fantastic run up. Now that it's cooled off a tad from its 52-week high, but still firmly above 600, should one buy at these levels perhaps for those who missed out on the rally?
Oh, yes, for SBI, definitely, yes. You can look to buy the stock at current levels, also on dips towards this 595, 590 levels. It's a good stock to buy. It broke out above its 8 to 10 year consolidation, and since then it has almost given 50% gains. But whenever this 8 to 10 year consolidation breakout comes in, you at least see a 100% gains, or even probably 200% gains. So that is what happened in Reliance and most of the stocks. That is what generally really happens. It's at a good level. It is witnessing a flag kind of a formation, and looks like it will break out very soon. Good volumes are happening also, and on the open interest front, it is a little lighter than the others. So at this point of time, look to buy. You can keep a stop loss for longs at around 575. You can look to book profits around this 675, 680 odd levels, which is where I see it coming, and that can come probably very soon.
All right. Okay. The next stock on our list is IRCTC. Raghumanda Harsha is wanting to know about the future prospects. Now, this one also, the moves that it has displayed last few months, not very impressive. What should one do at current levels?
Yeah, it's like a case of IEX. A lot of people again are holding on to this stock, but the bad thing for this stock is lot of volumes have happened at 1,000, 1,200 odd levels. And that means, some smart buyers who had bought at lower levels have exited, and you're not really seeing any volumes happening right now. So I would not be holding on to the stock at current level. It still has some downside left. It can come towards 550, 570 odd levels. If it comes there, look to again buy. But till then, do not hold on to this stock for now.
Okay. Saurabh is asking your view on Nalco. Now, this one also, while there has been a lot of optimism about aluminum as a commodity and aluminum stocks as well, which are into the business, last 6 months, good 15-16% upside. But given the volatility we've seen in the commodity prices also and in metal stocks, this one has also significantly cooled off. Now let's talk about the future prospects from these levels, 80 rupees odd. Where do you think it will go?
See, it has made a double bottom kind of a formation, just like the other stocks. Most of the metal stocks seem to have made a bottom, at least a near-term bottom. So I believe this stock can move up. There is a resistance and a strong resistance at 83 levels. So on a closing basis, this stock needs to close above this 83 levels. Once that is done, this double bottom confirmation will come in. And once that confirmation comes in, you will see a very good rally in this particular stock. So 83 is not very far. I would suggest, buy above 83 levels on a closing basis. And you can keep a stop loss of around 75 for your longs. You can, see this stock move up towards the 9,500 levels very soon.
It's interesting how we're getting so many queries on public sector stocks. Gujarat Gas, another one coming in. Surya Kanta is asking about the prospects on Gujarat Gas. This one again has also quietened after seeing a decent upside.
Yeah, again, this stock, the chart is a little negative. It's making a lower top, lower bottom formation, and it has come down from a resistance. So not a very good sign for this particular stock. It can come down towards the 420, 400 odd levels. So at this point of time, if you're holding on, exit the counter. Once it comes down towards this 400, 420 levels, that is where you buy again.
Okay, all right. Very quickly then, if you can tell us about the next query coming in. This is on paper stocks, JK Paper and West Coast. Funny is asking us if either of them could be a fresh buy.
Yeah. So, JK Paper, yes, most definitely, I believe, it's a good stock. Again, a flag kind of a formation is taking shape. The breakout for the same hasn't come in. So I would say, you buy above breakout. It is always better to buy above breakout because you get momentum, and within a span of few days, you get a good return and you exit the counter. So at this point of time, that breakout level for this particular stock is around 425, 430 level. So once 430 is broken above, you will see the stock moving up towards that 480, 500 level. So wait for the breakout. Once that comes in, buy the stock, and you can keep a stop loss of 415 post the breakout. West Coast Paper, it has witnessed a good buying move, but I would not be a buyer at this point of time. A double top kind of a formation has taken shape. The confirmation hasn't come in, but this is a dangerous pattern, so I'll be staying away.
Okay, all right. And how about your own preferred ideas in the market right now? Which stocks would you like to flag off?
Yeah. So it's a coincidence. Even I have two public sector stocks to give on the long side today. The first stock is IOC. A long consolidation, long downside has been seen in this particular stock from 2017 onward. This stock from 150 has come down to 50, and post that, some buying has come in. But the overall setup now looks positive. Also, open interest looks very, very positive. There's a possibility it can open soft today, but look to buy this stock because overall setup is nice. I believe this stock can witness good buying action, can come up towards that 90 levels. So look to buy here, keep a stop loss of 73 for your longs and on a closing basis. And that 90 can be your target. The second stock is GNFC. Again, I believe the downside for this particular stock is over. Good volumes have been seen on the lower end. This stock has witnessed a very smart recovery from 500 odd level, which is a strong support area. So breakout for this particular stock had a multi-year breakout had come in at 500. It witnessed good buying till 900. That breakout has been retested. So that is very, very strong, and a good recovery has come in. So I believe, now from now to the next 2-3 months, you will witness good buying in this particular stock. So look to buy this at current level. You can keep a stop loss of 560 and your target is around 620.
Okay, all right. Thank you so much, Neera, for talking to us about so many stocks, the trade setup, benchmark indices, and much more. With that, we're going to wrap it up right here on Morning Trade. Thank you for tuning in.